Hello and welcome. We are coming to you a little bit earlier than some of our normal webinars today, noon Eastern. I'd like to welcome everybody to this webinar today on O3 Mining Incorporated. My name is Jake Willoughby, and I'm the Vice President of Research and Analyst at Red Cloud Securities Incorporated. Joining me remotely today is Jose Vizquera, President and CEO of O3 Mining. We will begin today's webinar with a presentation on O3 by Jose, followed by a question and answer period. As a reminder, you can type in your questions at any time, and we'll try to get through as many as we can. But before we begin, I'd like to note that there may be some forward-looking statements made in this webinar, and I would direct listeners to the cautionary notes on page 2 of O3 Mining's corporate presentation located on our website. For Red Cloud Securities Incorporated, I would highlight that this webinar is for information purposes only. It should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. Also, we note that this particular webinar does not take into account the situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before. Company-specific disclosures for Red Cloud are the following. In the last 12 months preceding the date of the issuance of the research report or recommendation, Red Cloud Securities Incorporated has performed investment banking services and has been retained under a service or advisory agreement by the issuer. In the last 12 months, a partner, director, or officer of Red Cloud Securities Incorporated or the analyst involved in the preparation of the research report had received compensation for investment banking services from the issuer. And now I'm very happy to introduce to you Jose Vizquera, President and CEO of O3 Mining.
Hi, Jacob. Thank you very much for the introduction. I appreciate that very much. So I guess we are ready to start with the webinar, and here is our presentation to begin. So O3 Mining is the third iteration of the Osisko Mining Group, and of course, as part of that, the most successful advance Osisko had, which is a very reputable group, was the discovery, the put into production of the Canadian Malartic mine. The second stage of that was Windfall, where I was very much involved, and that has been an extraordinary discovery, and today there is more than 5 million ounces. And the third and a great opportunity now is O3 Mining, where we already have 5 million ounces and where I will be able to explain you the value proposition that we have here in O3 Mining. So forward-looking statements. O3 Mining has 3 main pillars, and those are our technical team, the amount of money we have in the cash, which is more than $60 million, and 5.2 million ounces in our deposits. We're focused in Val-d'Or, in a great area. Quebec is a fantastic opportunity to do exploration. Val-d'Or is an area where we have infrastructure, so we have railroads, roads, power, energy, and more important, we have an extraordinary technical team and a great group of individuals that can go to work and then go back to the city, which is extraordinary. That doesn't happen in many projects in the world. And also we have 3 main buckets where we are planning to do our work. And these are Malartic, where we are working towards production. And here I want to stop. I want to tell you one thing that is very important. O3 Mining intends to become a mining company. We don't intend to be an exploration company. We intend to be a mining company. Because of that, Malartic with our Marvin Deposit is moving towards production. And for that, we're doing a preliminary economic assessment, which will be able to show us in value the resource that we have right now in Marvin. At the same time, in Alpha, which is a great name because as a financial metric shows value, a value proposition. And in Alpha, we believe that we can grow the resources very fast at depth. And finally, in East Cadillac, we're expanding the mineralization footprint. So our presentation will be based on these 3 main things, which goes away and goes around very nicely with our name, which is O3 Mining. 3 things to have into consideration: technical team, money, and projects. And within the projects, three different stages of those projects. And of course, one of the areas that we are right now working on is to minimize this gap between the in situ value that we have right now and the market cap. And once the PEA is out, this in situ value will go higher. So we will have a better opportunity, and the investors will see the real potential of what we have in O3. Because remember, once the PEA is out, that's only going to represent the value of 1.8 million ounces out of 5 million ounces that we have right now in our company. Our shareholder base is a very simple shareholder basis. Osisko Mining holds around 31%. We did a raise recently where long-term gold investors join us in our journey. And we had 22% that now is in the hands of these very long and excellent gold funds. Our family office, so myself, my parents and my sister, we have around 6% of the company. And then there is free float. So it's very important to notice that this company has only 60 million shares outstanding and a market cap as of today of $156 million. We're focused in a fantastic area of the Abitibi, in the Abitibi, and between Timmins and Val-d'Or. In the area of the Abitibi, there has been more than 70 million ounces that has been produced in these two main breaks, in the Cadillac Ladder break and in the Destor Porcupine. As you see in our area of Val-d'Or, we control pretty much 100 kilometers strike length of a very productive area. And we're extremely excited with what we have right now. So here, I'm showing you a slide of where we are and where we operate. And you can see right away that here in our property of Malartic, we're very close from the Canadian Malartic mine, which is seen right in here. So this is just an idea to give you how close we are. And in here, these are the tailings from the Kena mine. So we are in the same trend as Kena from West Dome. At the same time, we're very close from the Canadian Malartic mine. Our focus is to drill at depth the areas that we already know. Why is that? Because previous deposits has been found. And what I like to say is Canadian gold deposits are not born as world-class deposits, but they become world-class deposits. Because as you continue to drill them at depth, especially these Archean low gold deposits, they extend very nicely. And proof of this is Laron, is Dion, is Lapa, but it's also other deposits like Sigma Lamac. But Red Lake went through the same concept. In the case of Hemlo, went through the same concept. And this is very, very common in these low gold deposits of the Archean. That's why we're extremely excited to continue to drill areas where we only knew the first 300 meters, because we can extend that mineralization in an easy way, in a sense. We have to be very systematic, but we have the opportunity to do so. And of course, in order to do that, we have to do 150,000 meters of drilling, again, in these three different buckets, as we like to call them. 25% will go to Malartic, essentially to try to expand the resource that we already have so we can extend the mine life. And if we find higher grade, then that will be put into the mill first so we can increase our NPV, net present value, faster. Then we go into the Alpha property, which is an area where we're going to spend 50% of our resources, meaning the money, in 4 different sectors, 2 of them being shown in here, Orenada and Bulldog and Acasaba. And one thing that we did in February of this year, we started negotiating an option agreement to essentially have, again, the option, not the obligation, to buy the Orbel mill for $5 million within 6 years. And that allowed us to have already set up the facilities. So once we have enough ore in Orenada or in Acasaba, we can ship it to Orbel. And for us, it's very important because, once again, our main focus is to become a mining company. So having already the mill allow us to focus on the exploration, develop the resources, and have an area where we can take it to production. And in the case of East Cadillac, certainly is less advanced, but it's an area with a lot of potential. Very little work has been done there. And we believe that we have a great opportunity to show the footprint and to come up with a new and brand new discovery in the area. It is important to mention that around our properties, there is other groups that has been very successful in their exploration. In blue, Agnico Eagle; in red, Wesdome; in purple, El Dorado. And certainly these are groups that has been extraordinarily successful in their exploration. As you can see, Kina is very close from our Malartic or our Marvin deposit, same as Canadian Malartic. And in the case of El Dorado, we are only a couple of meters, really not even a kilometer from the Triangle mine that they bought from Integra Gold. This is to show how close it is, our Marvin deposit, where we have 1.8 million ounces from the Canadian Malartic mine. This view speaks by itself. And then here from Marvin, going through the road that you can see it in here, the Kina mine is only 6 to 7 kilometers from the Marvin deposit. So what do we want to do with the Marvin deposit? What we really want to do with the Marvin deposit is to put it into production. And the way we want to do it is the following. We're going to start mining first the Kirenz and Nolartic area, and then go back to the Marvin deposit in order to put it into production. And that's what the PA will be. The PA is a preliminary economic assessment, will cost us around $600,000. It will be ready by the end of September. We're pushing to have it ready before. But worst case scenario is going to be the first week of October. We're telling the market it's going to be the fourth quarter, but we're pushing that to be on the third quarter. And another important thing that we should have in mind in this particular area is the fact that you can see here in Marvin, in Nolartic, and in Kirenz, a lot of that drilling has been done on a northeast trend, for obvious reasons, because it is perpendicular to the main shear zones, the shear zone of the Norbenite and the Marvinite. However, when we do this, we are taking or extracting, not giving the opportunity to these other plaques that could be going perpendicular to them, and you could be missing them. And you see that drilling has not been addressing those other possibilities to find a deposit, which is what happened at Kina. So we have to drill now northwest in order to verify that there is other opportunities for discoveries in the area. And the other thing to point out, it has only been drilled in the first 500 meters so far. So we have an opportunity here in Kirenz and Nolartic to expand this mineralization even between both of them. So this is a very interesting opportunity what we have here in Marvin, not only for what the PA is right now, but what it will be. In the case of Marvin, we can also see that most of the resources are actually in measured and indicated. You can see them here in green and in orange. All of them are measured and indicated. And in inferred, we only have the blue ones. So this is a very well drilled project, and it's quite advanced. Now we move into alpha, where we are going to be growing the resources at depth. And we have these 4 sectors that we have identified. The first one, where we have 2 kilometers of mineralization, being, of course, Orenada, Bulldog, Epsilon, and Pontiac. And in Orenada, we already have here around 320,000 ounces of gold. Then we have Sector 2, which is Acasaba. And in the area of Acasaba, we're only a couple kilometers, or meters really, from the Acasaba Eagle property, which Agnico Eagle has recently got the permits to mine. And we have the extension of that, and we're going to be drilling that as well. Then we have Sector 3, which is a very interesting sector because it's the only sector that has some similarity to Windfall that Osesco Mining has. And it's a bimodal volcanism, an intermediate alkalic, which we believe we have a great chance of finding something interesting. We have already 60,000 ounces of plus 5 grams. And we also see some of the previous drilling from previous years here in Goldora. We have 5.4 grams over 8 meters and around 8.4 grams pretty much over 4 meters. So this is a great start, a great place to begin as well. We are currently, as of today, we are doing some trenches and mapping in Acazaba and also in this area of the Anamac corridor in order to be very efficient in our drilling as we start that campaign. And then we have a couple of meters from Triangle, we have the Omega deposit, where we believe we have a very interesting opportunity there to unreveal value for shareholders. Now, I'm going to show you what this sector one look like for you to understand why we're so excited. It's important to mention that this legend on the bottom left-hand side, it's in gram per ton meters, which means that we take into consideration the grade, which is in gram per ton, the amount of grams per ton of ore, and the meters. So all the green there means 15 or more gram per ton meter, which means 2 meters of 7.5 grams or 3 meters of 5 grams. So it is very important to know that all these are kind of mineable width, really. So we also see from here, there's a very interesting opportunity here because there is a periodicity between Ordenada 2, Ordenada 4, Bulldog, an open area, and then Epsilon. And in order for us to see this better, we decided to launch here a 3D dimension view, which allow you to see in yellow all the assays that has been more than 5 grams. And it is very important because you see in here that the extension of Ordenada 2 and the extension of Ordenada 4 allow us to see that there is quite a big of potential here in this extension zone. And there in Bulldog, we see very, very clearly the amount of drilling that we have done. And we have moved from very little information in the first 100 meters to now pretty much 500 meters by 300 meters. All the drilling in gray is previous drilling. The drilling in black is the drilling that O3 Mining has been doing. And it is very important to see this. You see the periodicity, mineralization in here, a kilometer, mineralization in here, a kilometer, mineralization in here, and right in here, very little drilling and a great opportunity for drilling for O3. Little drilling in Pontiac and Epsilon, but we have been finding mineralization, again, a kilometer after, an area where we should drill and confirm that, and Pontiac West, where we have been getting very interesting results. Very important to mention here, if we see the pit, right? We know that we have 320,000 ounces or so, and that is only in these little pits. But if we include into the resource these other areas, this can certainly grow, and that's something that we're going to be focusing on. Now we move into East Cadillac. And East Cadillac is a very interesting area because an area there is a little amount of drilling, not as much as in Alpha or in Marvin by instance, but yet we did 3 lines of drilling from north to south. And we were able to find, in the case of Simon West, 1.8 meters of 9.7 grams, 2 meters of 8.9 grams. In the case of Northeast, a little bit of smoke there, 0.5 of 10 and 0.6 of 10. By north of Northwest, we had a 1.5 meters of 16 grams, which starts to show kind of another corridor in there. Probably matches with this corridor from north to east, which shows 1.3 meters of 8.3 grams and 0.5 meters of 29 grams. And we recently announced this drill hole, which was very interesting. We had 1.3 meters of 46 grams. So we're starting to see a little bit of a higher grade component in here. And we're currently drilling only a kilometer from there in the area of North Contact, which is an area we are very excited for the geological framework that we have there. And we have done 5 holes, and we'll be waiting for results. So stay tuned. We're very excited of that area, and maybe this 1.3 meters of 46 grams is the beginning of a discovery. Of course, we have to do more drilling in order to consolidate this, but this is certainly very interesting. Then we move to Ontario, where we have 2 million ounces in Garrison, and Garrison is an area where we believe we have a real chance, especially now that gold is $1,800, and we will be working in different alternatives for Ontario. Either we're going to sell the project, either we're going to team up with other groups to do something bigger and more robust, or we might decide to do it ourselves. So we have a lot of flexibility in this story of O3 mining. So as a summary, what we have done is we have done exactly what we told investors. We were consolidate the area, we did. We were going to look forward to be a mining company. So we have gotten the option for the Orbel mill. That has been done. We have been able to execute in our drilling. And we have raised now the money to finish the drilling that we have to do, especially in those 2 kilometers of the Alpha property in Sector 1. We have enough money to tackle the exploration on the surroundings of Malartic. And certainly if we consolidate a discovery in Cadillac, we have the money to continue to drill that area. So with that, I'll turn into Jacob for further questions. Again, O3 Mining is OIII and the Toronto Stock Exchange venture. And we're extremely happy to be presenting here with Red Club.
Thank you very much, Jose. That was a very, very thorough and technical presentation. I was wondering if you could talk a bit more about the PEA that you're working on. Obviously, it's going to be anchored by the resources there, but what are the processing options you're looking at? Where would the ore go? Those kinds of things, if that's been decided yet.
Yeah, of course. We are going through a bunch of trade-off analysis. I have to be honest on that. We don't have all the answers right now. What we have is a resource of 1.8 million ounces, and mostly is in measured and indicated. We have done on the back of the envelope some analysis that I can share with you, although they're not the results, and I don't know how close they will be from the results of our independent group, which is working on this, which is Ausenco, an Australian firm. But what we worked on was a 7,000 ton per day plant for a capex of around $180 million, and having as a result, with a dilution, by the way, of around 10 to 15%, having as a result a project that will give us an IRR post-tax of plus 25% and an NPV of 250 to $300 million, depending on the gold price. And we're debating if using $1,300 gold or if we're going to use $1,400 gold. For an $1,800 gold that we are today, none of them look too aggressive, but that's where we are now. Of course, where are the trade-off analysis? And before we go to trade-off, with regards to the different works that we have to do in the field, resource has been finished, geochemistry has been finished. We have done geochemistry of the waste. We're working now on a geochemistry characterization of the ore, and with that, we're finished with all the data that we need to start writing up the report. With regards to engineering, the plant has been finished. We have been considering either a flotation and produce a con, and also considering producing a doré. So there is a difference in capex there of around $50 million between one and the other one. So I imagine that we will push for the doré, but I mean, there is other considerations to have. So, and then to your point of where to process, we have now the Orbel facility where we can use it as an expansion. Certainly, it cannot take all what we need because it's not going to carry 7,000 tons per day, but it can allow us to accelerate the project in terms of permitting. We are also evaluating even a possibility which is not in our hands, but that's Monarch's mill from Camflow, and that's another chance that we are evaluating to see if we can have some synergies there. So certainly, this is a project that years ago was looked at the ugly duck, and I think the Osisko Group has been very good on converting ugly ducks into beautiful queens. So or world-class deposits that they did with Malartic when it was in bankruptcy, and they built today the largest Canadian gold mine. Windfall was dodged by everyone, and now Windfall is probably one of the better underground deposits in Canada. And I think Marvin will not be the exception, will be one of these, very productive open pits. And if we find something around Marvin, we'll make it even more interesting.
When I visited the site in December, it seems like 2 years ago, but one of the things you talked about was some of the high-grade shoots that are there at Marvin, especially down at depth. Are you drilling to try and look at some of those potentials, or are you just looking at the open pit scenario?
Right now, for the PA, we're working with the data we have. We are considering drilling at depth, and we are considering drilling 3 targets that we reviewed with you. One of them being Gold Hawk, the other one the high-grade Malartic, and another one on the northeast. So there are 3 areas that we believe has quite a bit of potential. And again, this idea of drilling parallel to the 2 main shear zones could be a game changer in the area. No, I mean, this is just a theory. We have to prove this. No.
Mm-hmm. So that would be potential for perpendicular faulting that mineralization might have accumulated in.
Yeah. So if we think this more as a jog, right? What you have is the thinner part will go along the shear zone, but then the thicker zone will be in the middle. But it has never been seen as a sigmoidal on a bigger scale. It was always looked in a smaller scale. So it will be interesting if this theory works. We could end up with a bunch of discoveries there, which will be very interesting.
Right. I mean, it's maybe not evident to lay people, but there are many examples over time where changing the angle that you're drilling from makes a huge difference for what you find, especially if you're drilling parallel or perpendicular or just off of parallel and things like that.
Yeah, in our case, the advantage we have is that we don't have any preconceptual concepts, if you may say. So because we don't have any preconceived concepts. Our team is a very young team, so we just ask the questions. Why not? And the answer cannot be because we have done it like this for 50 years. That doesn't exist anymore. Mm-hmm. In the case of Alpha, we have hired, for example, a group out of Valdor, Myra, and we are working actually in artificial intelligence. We are running every single hole since the 1960s, and we're just running different iterations to see where are the better areas where we can drill. And we are building 3D models for Alpha, which of course is confirming some areas that we already knew, but it's showing us up areas that we did not have any faith. And it will be very interesting once we finish that we show it to different investors, because I think it's important that we as a new generation start doing things a little bit more aggressive, if you want to call it. But at the same time, maybe a better word is let's use the science that already exists.
Mm-hmm. Okay, I'll turn now to some questions from participants. The first one here is probably a question you've had a number of times, and it points out that in this particular participant's opinion, Cisco royalties ended up buying Barkerville at a lower valuation than some other companies, and they're asking what is there to protect O3 shareholders from that kind of thing happening again?
Not having Cisco with 50%. So right now, Cisco Mining came down and has shown good faith on our investors. They have reduced their stake from 56% right now to 30%. It has shown a clear path that Cisco Mining does not intend to roll it back, but rather to be a meaningful investor because they believe in the project. They want to make money out of it, but they don't intend to roll it back. And Cisco Royalties does not hold any meaningful shareholdings in O3. In any case, I do believe that was a great acquisition by Cisco Royalties. I think it was a great asset, the Barkerville asset. Mm-hmm. And there is no better defense, Jacob, than having a very good share price. Because if our share price is low, then they can buy you. If your share price is high, no one can buy you. So it's our job to bring the share price up.
Yeah. Okay. There's another question here asking about if you could discuss the analog to Kina and what you said about the Northeast versus the Northwest drilling. What did they do exactly at Kina that you want to maybe recreate, and why this hasn't been looked at in the past?
Well, I mean, let's start by Kina. They turn around the drill rigs, and they went northwest in their drilling, and that's when they start finding these high grade shoots at depth. Why didn't they do it before? Probably because of these preconceived ideas that you have to drill always perpendicular to the shear zone. What we have in Marvin is the same contact between the Marvinite zone and these mafics. So there is no difference in terms of the lithologies that we have in both areas. And also the highest grades that were found at Kina were below a kilometer. We have just been drilling in the first 500 meters. So I think that by drilling parallel to these two main shear zones, we have the opportunity to find these other structures. By instance, one of those structures is not only the one in Kina, but to the north of us is the Camflow mine. The Camflow mine was the first mine that Barrick Gold had. They put into production in the 1984, I believe, when they changed the name from Barrick Petroleum to Barrick Gold Mines. And I mean, what a beauty to be in the area where the largest gold producer in the world started. And they found that plug in the 1980s by drilling parallel to these shear zones. Why people change their mind, I don't know. Again, I think we have an opportunity as being new incomers with no preconceptual ideas that we can just go and execute on the basis of what we see in geology. So that's why we believe that we have a chance.
Yeah, that's a very, very good point. I mean, when a camp's been around as long as Val-d'Or, there's a lot of people who think that it's understood and everybody knows where everything is. And Kina is a great example that even if you've been there 50 or 100 years, you can still get surprised all the time.
Yeah.
Another question talking about the mention of the Camflow mill and versus the option you have on Orbel. And they're asking under what circumstances would you choose to use Camflow versus Orbel? I think I have an idea. The answer is size and transportation distances, but I'll let you respond.
So yeah, and of course, Camflow and Orbel both are too small for Marvin. Mm-hmm. It was that we need 7,000 tons per day. Where we are working on the trade-off analysis is how much infrastructure from both sides can be used to minimize the capex. And the next question is, in that delta where we minimize in capex, in the case of Camflow, we will have to buy that, right? So are we going to be able to buy it for a delta that makes sense or not? In terms of distance, of course, Camflow makes more sense. You can just pump it up. In the other place, you have to track it. In terms of the facilities, they both have more or less the same in terms of facilities that can be reused. So we're still in the analysis, and I think we'll be right now pretty early to talk about it.
Okay, excellent. There's a very typical question also asking what your expectations are for the gold price in the next 12 to 18 months.
Well, I now have made my mind a little bit better after I heard a Korean economist that essentially said that in 2008, when the crisis hit, the United States issued a bunch of money, and they issued the same amount of money that has been issued today in 3 months. They issued in 3 years. So they took 3 years to make the $3 trillion of issuance since 2008, 2011. And in 2011, we hit the peak, which was around $1,800. We've done it in 3 months. So if we are already in $1,800, I really don't have a problem of saying the gold will reach over $2,000 for sure.
Mm-hmm. Yeah, we wrote a second half piece this week, and one of the things we pointed out to people is that the Fed's balance sheet in the United States was at 4.2 trillion beginning of the year, and they expect it to reach 10 trillion by the end of the year.
Yeah.
And those are pretty much unprecedented levels. And that's only if things continue to work in an improving fashion. If they don't, then they'll expand it even further. So.
And to your point, that is only the Fed. We're talking about the Fed in 2020. I don't know what were the numbers in 2008, but this is just the Fed easing money. We're not having into consideration the regular individual that walks every day to work, the amount of debt that they're getting into. Some people are not working. They have to get debt to pay the houses. They have to get debt to pay credit cards. You know, there was this very interesting economist or an article in The Economist where they were saying when we start seeing inflation is when you start seeing the friends that you know being fired, and then you see deflation. And I think we're very close to that. And of course, every time that there has been a convoluted time or a very difficult time, gold rallies. And I don't think this is the exception.
Right. There's one more quick question here about the tailings for the project, asking if you were able to acquire tailings capacity with the option on Orbel.
Yes, we did. When we bought the Orbel mill, or when we bought the option for the Orbel mill, because we haven't bought it, what we did is we did a 2 kilometer by 2 kilometer essentially square square, where we have the mill and all the tailing facility. So if we want to expand that tailings facility, we can do it at any time. I still believe that that's too small, and we'll have to grow it quite a bit.
Okay. I think that's a pretty good overview. I really enjoyed your presentation, especially the way you manipulated the 3D projections and showed things both from above and below. So with that, we'll wrap up the webinar here. I want to, of course, sincerely thank Jose as well as the audience members for taking the time to participate in this webinar. And remind you that our next webinar is Monday, July 20th at 2 p.m. with TriStar Gold Incorporated, and will include Nick Appleyard, President and CEO, which I will be hosting as well. So once again, thank you, Jose, for this and participants, and we wish you well.
Well, thank you very much for your time, Jacob. Once again, join us in this journey. O3 Mining is well prepared. We're ready to roll. O3 Mining is OIII in the Toronto Stock Exchange venture. Thank you for your time.
Thank you.